Am I audible to everyone? Please comment on chat box. Okay. So, welcome everyone. Before we begin, let's understand one thing, one simple thing. What is technical analysis? Technical analysis is nothing but the study of price charts to understand where buyers are coming, where sellers are dominating, and when the right time to enter or exit. It doesn't focus on news or opinions, right? But it generally focus on the market where is market actually going down. So now let me tell you a simple story. This will help you to understand what is technical and what is fundamental analysis. So there was an investor named Raj. Raj was an expert in like fundamentals. He could analyze company deeply, like profit, growth, management, everything. After weeks of research, he found a very good company, and he said that the businesses was great. So with this confidence, he is invested in this stock. But after buying this stock, the stock didn't move. You thought why the stock didn't move? The company was actually a good. But suppose, but after buying the stock, the company didn't move and the stock started slowly falling. Raj stayed calm at first, and yeah, fundamentals so strong it will go up. But weeks turned into months, still no movement. The stock was dead. So now confusion is started to everyone. Like my stock was good company and the company fundamental was good. Why my stock was not up or go? So at the same time, there was another trader whose name is like Aman. Aman also knew about fundamentals, but he followed one simple rule. I will only enter when price confirms. He tracked the same stock but didn't rush. He kept watching the chart. Is demand coming? Are buyers active? Is momentum building? Then one day everything changed. The stock gave a strong breakout, volume increase, price starting moving further. Then Aman entered the stock. This time the stock actually moved, and when the momentum slowed down, Amit exited and profit early, book profit. So now here's the truth. Raj was right about the company, but Aman was right about timing. I say, I repeated, Raj was right about the company, but the Aman was right about the timing. So in the technical analysis, even if you are master in fundamental, without technical, you may enter too early or exit too late. That will ruin your profit because fundamental tell what to buy, and technical tell you when to buy, and even more important, when to sell. So in the stock market, you didn't get rewarded just for being right. You are getting rewarded just right in the right time. That's exactly what we learn about in this course. Basics of technical analysis, like how to read chart, understand price, and most important, how to take better entries, exit with confidence. So let's begin. So I start with the food street dilemma. How do you choose? For example, you are going to a new place and you have to eat something. Firstly, you have do a research like what the ingredient, what's their cooking style, taste before choosing anything. This is just a type of the mental analysis. And same as you are observer, like you have seen these cart have the more crowd, the stalls have longest line. So you are mainly good at human behavior. You understand what is the price like. Is there any price flow that humans are there, or is there any good thing? So like this is the study of the technicals. Technical analysis is the same like method of trading opportunities by studying chart and price behavior, like as we talked earlier. So we are know the difference. This is just a definition of both the approaches to the market, the fundamental analysis and the technical analysis. What it study? In fundamental company data, we study profit, balance sheet, business performance. And our goal is to value for an asset. The primary use for this long-term investing of for same technical analysis, historical price charts, market trends, and the main goal is to find precise entry and exit point based on the price action, as we earlier study on the story. So primary use for this the short term. Both method are good. If you are a proper investor or trader, you have to know both the things. They are just the complementary to each other. So reality of the technical trader. The first reality of the technical trader is like the holding period. How you are hold your trade from the last minute to few weeks. It's a primary short term strategy. I already told that you have used technical analysis in fundamental stock, which has long term, but technical also use in short term for intraday trades, for short trades, just like that. And for returns, we do not expect big profit quickly returns, because our goal is to make a small and consistent profit through short trades and the risk management. Like if your trade start loss, as we know the story of the Aman and the Raj. Raj was losing start, but he hoped from their stock that their stock was recover, but they did not recover. So we have to follow a risk management for that. Because of risk management, we never hold a losing trade too long. And the commitment. Before we starting the course, we have to commit ourselves that this is not a too quick scheme. It demands too much learning, practice, and strict discipline. Okay. The universal language of price. Like suppose you are learning technical analysis, and many of you are from crypto background, stocks background, forex background, but you have to one question: is it technical analysis valid on everything? Yeah, is it valid on everything? Like just a driving a car, you are going to a driving school and learning a drive a one car like Maruti, but just learning a one car, you have all drive any car, like you have a Mercedes, you have a Toyota, any car you have to drive. Just same as the technical analysis. If you learn technical analysis, you can apply in anything: stocks, foreign exchange, crypto, bonds, commodity, anywhere. Understanding these things like technical analysis, you have follow everything. Unlike fundamental analysis, where you have to drastically changes every sheet and the technical analysis for everything. Fundamental analysis for everything. Technical works exactly same as every instrument. So we have four pillars of the technical theory. The first one is market discounts everything. All news, information, global expectation is already reflected in your chart. We have seen this in later how they are reflect in our chart. How is more important than why? And let's focus on how is like if you are analyzing your company, your how is more important than why, because our main focus is to moving completely ignoring underlying reasons and behind to move the for saying price movement trends like price moving uptrend, downtrend, accumulation, distribution. We have studied these things Like market don't move randomly. They typically establish a trend. Like if any stock is in trend, they are in uptrend. They are in downtrend. They are in accumulation like sideways market. And the fourth thing is history repeats itself. Anything happens today will happen in future and will already happen in the past, or these things are already reflected in our price pattern. They are reflected over time to time and reflected against the DNA of trading period. OHLC, open, high, low, close. So what is DNA of trading OHLC? Anyone has an idea? Like any, for example, we are talking about Nifty. Like Indian market is opening on 9:50. So when will it open? 9:15. So this one is opening, this one. And during the day, they are going to high. So this one they're high. And after some time, they are marked their low. The low is the lowest price of the during the session. And then they are closing to close toward their session. So closing is their close. So in every day, million of trades happen in a single day. To analyze this chaos, we just use this period down to these four critical points: open, high, low, close. They are reflected in our chart, in our candle, in our price. So we are taught this earlier, and we are majorly focused on these 4 points. The evaluation of charting. The like you have 4 points. We are studied the 4 point. All 4 points are important, and for that the line chart. Line chart has does not has a other three values: open, high, low. They only reflect close values like closing point. So this will not give too much information to us. So we are plot this like this. This is their diagram. After that, we have discovered a bar chart. Bar chart has complete open, high, low, close data, but it is visually complex. You can't predict anything by seeing this. It is difficult to read. Then when we group together with their price, so we invented the golden standard of the candlestick, the Japanese candlestick. They have high, close, open, low, everything. It is a highly visual geometric format that will easy to do a trade. So this is just a theory part, how the candle reflects just like a trader in Jap. Uh, it was used in trading in Japan, rice trading basically, to know the demand and supply. But the it also reflects that time the emotions and the psychology of that thing. So Japanese invented this thing method to map the price and demand, like supply and demand. So after 1980s, American traders Steve Nissen discovered this method and introduced to Western trading. So we are using this pattern. Like mainly the main method for global standard use was Japanese candlestick. We are still using this. The antinomy of Japanese candlestick. If you are looking at these two candles, this one is bullish candle, this one is bearish candle. Bullish candle has those who has high, low, open, close. Close is higher than open. If you are seeing on this chart, closing is higher than open. For example, you are buying any stock at 20 rupees in opening session. After some time, the stock was closed as 25. So closing is higher than open. Means we are suppose that buyer was stronger towards the day and price was pushing towards upward side. Same for bearish candle, but only one thing, like closer is lower than open. Like you have to buy 20 rupees stock, but during the closing, it's like 15 rupees. So closing is lower than opening. Sellers are stronger, but pushing the price downward. It's the decoding of body of the and shadow of the candle. This one is the real body. This one is upper shadow. This is lower shadow. We also is called this wick. Upper wick, lower wick. The more the body size, the strong the body pressure, market pressure. Lower the body size, lower the market pressure. Shadow reflect the price reach and pull back towards their back. And they show volatility and rejected price level. Like any stock goes to 70, but the price rejected from themselves and close like 67. So it showed that the metrics of time frame. What is the metrics of time frame? We are learn too many charts. Like we are learn too many candles. There are a lot of candles in a month. Like if you are counting one monthly candle in a year, there are 12 candles, 12 monthly candles. In a week, there are 52 week candles. In a daily chart, they are just like a 252 candles. So how we can suppose them? We are learning on this chart. So we are go towards the chart now. This is the trading view. This was the terminal used for trading purpose. Yeah, if you have any broker, they already have their own trading terminal where you can see the price behavior of these stocks. That's usually a price charts. Okay. Have you seen the charts? So first we talk about candles, the bullish candle and the bearish candle. If you look like this candle, if you look this candle, the bearish one, where there are 4 points: open, high, open, high, low, close. And for that, the bearish candle, their opening was 51,591 and their closing was low, like 50,774. So we can predict that this was a bearish candle because their closing was lower than opening. And for bull candle, if you have seen their like their opening was 50,398 and their closing was 51,556. Like their closing was higher than opening. So this one is bullish candle. This reflect and this have a higher body. Like throughout the day, they have high body buying pressure. This candle. And then now we talk about trend. What is trend? So trend is just like if you have seen a Nifty chart. I will create this. Like we have to learn three trends. This was uptrend, this was downtrend, and this was accumulation. And we have seen in our charts they are follow only three trends: uptrends, downtrends, and sideways. So for Nifty has their sideways trend. This was downtrend. This is also a downtrend. So market are work only in three trends: uptrends, downtrends, and sideways trend. We have to find where is the what trend happening currently. Like if you are in long position and you are in downtrend, you already losing your trade. You have to have right. So when will trade happen? Just for uptrend, these are the uptrend where we have to know the. We are seeing on the Nifty chart. It's also on stocks charts, future charts, and forex charts also follow this same thing. Like if we are opening the USD and INR chart, they are here they follow the long uptrend and have short downtrends. Here consolidation sideways. So market only follow three trends: uptrend, downtrends, and sideways trend. We have to focus only on uptrend. When uptrend started, we have to write the stock or forex pair. If you are to sell the stock, you have in downtrend. But don't be in consolidation, because during this period your stock will not go up or down. This will only consume your time. So now we are going to our four pillars of stock technical analysis. The first one is history repeat itself. We have to figure it out in Nifty chart. If you look at the Nifty chart, if you look at Nifty chart in 2025 April 7, the Nifty was at 22,287. This was their support. And on 7 April, what happened? The Trump was announced the tariffs. And previously, if you are looking at this point, like 4 June, Indian election result was happened. There was support at the same line. And after a few times, the current scenario, this line, where ceasefire will happen. So you have seen both 3 pointed support at same line. This which we called as support, where price exactly come towards and the same line. And why we I tell history repeat itself? Because this was already done. This was already done. We have seen three times. So this will reflect in our chart. Now we see the patterns of the time frame. So we have four types of pattern. Four, we have different time frames like R. R we are using for swing trades. For minutes we are using for intraday or quick trades. For months we are using a trade for too long. Like for example, if you are seeing this candle, this was an April month candle. This was complete when the last trading session of the April was completed. Like same as March. This was complete on. When will it start? It start on 2nd March, and it was completed on the last day of the March, last trading day of the March, because trading was only happen 20 days if any holiday is not coming. If you are seeing this for weeks, we have 4 weeks. Like for the same for March. Same for March, it is started from there and ends there. This was a downtrend. Let me tell you one example and you have understand better. We have to cover from defense. This is also clear you why history repeat itself. If you see any stock in defense, like I will cover Hindustan Aeronautic Limited. If you see on the chart, why every news result is already reflect on the price. This will tell you. If you see on the quarterly results of the Hindustan Aeronautic Limited, you have seen that March quarter is better compared to December, June, and September quarter. If you see, there are four digits result sales. After that, 12,495, five digit sales. Then comes to June, four digit sales. Then comes to September, four digit sale. If you look again in March quarter, you have seen 14,706, just double compared to their other quarter. So we are know that like the March quarter was good for Hindustan and not Limited. Is this reflected on their chart? Yes, it's reflected. If you see on Hindustan Aeronautic not Limited chart, you have seen that. Like it's already April started, and their chart was like you see that April is already started, and the stock was 26% up. News is already reflected, even their result is not come yet. The market knows already. You have predict from their chart. Same for April. And I already told you, we have to in if you are in long trade, we have to in long trade, uptrend. If you see again there, March, April started, this will go up. And there is result is come later, but stock is already up. Same for there. The pattern was follow from long, not follow for first time. This will already follow from long time. We have covered 3 years data, 24 data, 25 data, and 26 already started there. If you want to see in 2023, same. March started and the stock was moving up. This will give you a multi-bagger return even if you are a investor. So now we know the price already like news already reflect on price chart. So if you are a fundamental investor, you bought when the result was good, you have seen, and when result was good, stock was already up that time. So if you are good at technical analysis, you are already know when to buy, when to sell. So if we are looking at technical analysis, we have known that April is good and we have to buy at that point. If we are already buying that point, at that point, we can give a mega returns from the market. So not from Hindustan Aeronautic Limited. Other chart also do the same. For like BDL, BDL do the same. In April, they gave a multi-bagger return. April is already started, and we know that. We know before the result. We know before any news because price already reflect on the charts. News already we have seen on the chart. So now we have come to our slides. If you have any doubt, you can comment on chat box. So what is this? We when we use the which time frame? Like for if you are a long term trader, you prefer weekly or monthly charts, and your goal was to capturing macroeconomics like every broad result and trend. And this will benefit you to filter out daily market noise and emotional fluctuation from there. And what is for a short-term trader like high-frequency trader? What is their use? We have used a 1 minute chart, 5 minute chart for intraday, and go. And our goal is simple: to capture short, rapid price actions and market imbalances. And their benefit was to find out precious early entry exit that will return on the daily noises. So what we have learned today? What we have learned today? The universal application of the price action. Like if you are know the technical analysis, you use in any trends, price, behavior, crowd, or any asset class like bonds, crypto, stocks. Because you are using technical analysis where the historical data is present. Just I said earlier that any technical analysis are made because of historical data. They have already done in past and done in future. So and we have to follow strict rules. Technical analysis, like for if you are not disciplined in technical analysis, short-term positioning and your losses must be cut quickly. If you are in losing trade, you have to cut quickly your losses. And the holding is not for hoping that our strategy is good like this. And the for the third in the OHLC foundation, every unit of analysis require four data as we talk: open, high, low, close data. That's how candle make. And this one is the visual candlesticks, like Japanese candlestick, how we visualize. So we have to come toward this 4 points, four pillars. The market discounts everything, price movement trends, history repeat itself, and how is more important than why. We have already seen all news, global expectation are reflected in price chart. We have seen all news are reflected on price chart. So now we are talking about the current scenario. If you are looking at the current scenario, like anyone doing a commodities, uh, I took one two question first, then we'll come to this side. For long-term trader, do we need to always on the screen to keep updates on the stock we purchase? No, if you are in long term, you have to not always on the screen because first, like your stock has the any trend, like it's if is an uptrend, and they have you have to buy their in support. You have to not follow. You have to follow like weekly. You have to check your stocks like our stock is where they are in case they are even not like downtrend or any in consolidation phase. So you have to check not daily but weekly. You have to check your stock is in, and you have to know when you will enter and which criteria you will exit. If your criteria will enter like you have go through price action, you will enter because of price action. You have to exit because of price action, not because of any bad news. Because if sometimes, like I already said, like how is more important than why. Sometimes stock is not good, but their chart is rising. Why? Their chart is rising because of the stock was already reflected like bad news in their chart. So, okay. Prem Sharma, what is importance of stop loss, sir? Like stop loss is the main key of the price action. You know the price action, you know the risk management, but you know everything. But stock is like falling. started. You have to buy any stock at 300. The stock and you have to sell around 400. But stock not go to 400. They already start down. You have sometimes people are losing their whole capital because they are putting one whole capital on their one stock and the stock isn't opposite as they said like you are supposing like your stock will go to uptrend but it is in downtrend the stock will lose you have losing money now so stop loss is more important because you if you are putting a stop loss on their stock your stock is limited your loss is limited and you have to cover them from that like so I am buying a stock and my hope is like 300 stock will go to 400 but stock started falling I will exit then from that I will put my money from another stock this will help me too also okay if you have any other question you have write on comment box so now I will go to support and resistance what is support what is resistance okay you have any if you have any particular stock commodity which can I analyze you can comment down on chat box yeah it will help to save your capital if you have any stock that will I analyze you can comment on chat box I will analyze that stock or commodity this will help you for to know better support resistance and trends any stock or commodity you have sir gold stock okay I will go to a XAU USD chart. From 24, the gold was in like a massive uptrend. This was come from like 2000 to 500, $5,400. Okay, if you see a gold stock, you have seen like this is what is consolidation phase. So we have to not to buy in consolidation. We have to buy when our stock was cracked the consolidation. Now this will go to uptrend. After that, it will is 2 week short downtrend. Again, this will go uptrend. So we have to know that. Then downtrend. The first one where consolidation happen. Okay, I'll read the gold chart before 24 because it has a good support and resistance. If you see there, okay, if you seeing a chart, you will see that the gold has, we can call it massive resistance. What we call it resistance. If you see a gold, this will a monthly candle. So gold from 2013 to 2019 has a huge consolidation, huge, and this will called be called as resistance. Like resistance is like if you have like price will not up from there. If you see, price will go up from their rejected, from their rejected, from their rejected. This will go up from there. So the many times our price are registered at same price point. We can call it resistance and we draw a resistance line. This will is our resistance lines where many times our price was rejected. If you have seen, we have studied many pattern from this. Okay, and one more important thing. If you have seen, whenever consolidation happened, volume was dead. Like large institutions are accumulating these things. If you have seen this in gold chart, when gold was in accumulation phase, this was their resistance. Resistance is what? Demand zone. This will not supply zone. We studied zone later. So and when the stock was rising, the volume will go up. Eventually, they will go up. If we talk about their VFC price was rejected from same point one time, two time, three time, four time. So we call it resistance. Where resistance like our price is resist from there, and then this will break. Volume is also increasing because we start in starting we studied the what is technical analysis made price and volume. You see from 2024 how gold rising, like even in every month they are rising 5, 10%, 20%, and their volume was so crazy. Now we have to read any stock chart like current trending chart GMDC. Why will I use monthly candle? Because I will here for positional stocks, not for swing, only positional stock. If I am talking about the swing stock, I will use the daily chart. Now I will use a daily chart from there. If you see, this will are resistance. Why resistance? The price was rejected many times from there, like one time, two time, three time, four time, and five time. And when this and today they cross like 20% upper circuit. They are rejected many times, same level, and now they reject the line, the resistance line, and come like 20% in a day with massive volumes. When this happen, the volume was also dead. It will also come whenever any news will happen, or volume only when come. So when the day this will pass the resisting line, you were seeing this stock from 3, 4 more sessions. The stock wasn't trending. Now we talk about support. We studied resistance. Now we talk about support. What is support? So I will talk. Okay, support is the zone where price is not fall from there. This will act as support. If you are standing in the floor act as a support. Just like the price is not, for example, this point. If you are seeing there, price is falling, but suddenly they are pulled back from there. This line act as a support. This zone as a this price as a act as a support. Again, the price come there and again they are going up because they will act as a support. The price will not go big there down from there because sellers buyers are active there. Big money are accumulating stocks from there. If you are seeing, I will use as a crude oil example for support and resistance. Crude was in downtrend from long time. This will act as a support where every time the price comes, they up from there. Are they stuck from there? The price will not go more down from there. You have seen this, and it will go from there uptrend. If you have any question related to stocks or whatever I teach today, you are commenting on the comment chat box. Now I took the example of Bitcoin, the crypto. What we call this? We call this support zone, where our price are act as a support, but between any two three prices. Like gold are stuck between Bitcoin support zone was 66,000 to $62,000. If you are seeing on this chart, Bitcoin was stuck there. This was a act as a support zone, and this line will act as a resistance. Price falls again, rejected, two three times rejected. We can call it rejection zone for Bitcoin. If we are seeing in long term for monthly charts, we seen that whenever this price come, like same for their resistance zone, now they support zone. Okay, like I now talk about one more market, capital market, Nifty capital market, where every trading stocks come like Angel One, Grow, Motilal Oswal. If you are seen on their chart, you know one thing. It will show you one slide. You see this point act as a support, and this point act as a resistance. When this will break, the stock was in uptrend from there, and from the support they are in uptrend. Even they are rejected from the support, and now they resist the rejection zone, resistance zone, and the stock will start from the uptrend now. Okay, volume is important. Volume is important because sometimes volume will show how is big player in your stock or not. Like if you are trading a stock, you have to see like whether the big player in there is your stock or not. Like whoever has the more stand, buyer and the seller. If the seller has the more stand, the stock will in up downtrend. If the buyer has an up stand, the stock will go uptrend. If you have any question, you can comment on chat box. I will cover them. I will show you one, two more charts and we will end the live today. Okay. If we see the Nifty Metal Index, okay, what was this line? Price was what was this line? Price rejected two, three times, one, two, three times there, and then they resist this. We call it resistance line. Wherever the resistance crack or cross, we can consider it as the stock will now go up from uptrend, or this will act as our support. So you understand what is support and what is resistance. Support is like base and resistance. Okay, resistance line. Again, I am opening a Bajaj Finance chart. You have seen this line act as support, and after crossing this, this same line act as a support. From there, this line act as a resistance because price was not going up from this line. After that then the price was going up from there. This will act as a support. So sometimes the same resistance line will act as a support for other price when the candle was happen. Okay. So anyone has any doubt? Okay, we will end this history. Thank you everyone.